It's official. The longest bull run since World War II. The Obama-Trump bull market is now longer than the bulls of Eisenhower, Reagan, and Clinton. Here's a look at the drivers and the speed bumps that this bull has run straight through. Bull markets always emerge out of a scary time, and that frightening period was the financial crisis of 2008. Subprime mortgage lending in the mid-2000s helped create a housing bubble. When the bubble popped, over-leveraged financial institutions, titans of Wall Street, came crashing down.
It's very easy at this point, Charlie, to imagine worst-case scenario for Bear Stearns.
In March 2008, J.P. Morgan bought investment bank Bear Stearns for just $2 a share in a deal propped up by the Federal Reserve. And in September 2008,
the crash of the Titans, Wall Street in panic mode this morning.
Lehman Brothers filed for bankruptcy after it couldn't find a private buyer or a government bailout.
We are in the midst of a serious financial crisis.
With the stock market in freefall, extraordinary government measures were taken over the next months, including TARP, a $700 billion asset purchase program to bail out financial institutions.
The actions of the Treasury, the Fed, and the FDIC have stabilized our financial system.
Quantitative easing, where the Federal Reserve bought an additional $600 billion in mortgage-backed securities. And the stimulus bill in early 2009, another $831 billion in government spending and tax cuts. But even with all that, the stock market didn't bottom out until March 6, 2009, when it hit a hellish 666. That was down a terrifying 57% from just 17 months earlier, the worst drop since the Great Depression. Then things bounced back, beginning this historic bull run. Within 3 months, the market was back up another 30 to 40%. In 2010, the economy started adding jobs on a consistent basis. It's been so regular, in fact, that there hasn't been a single month of job losses since October 2010, the longest streak on record. In November 2010, the Federal Reserve started a second round of quantitative easing. The idea was that buying Treasury bonds would help keep already super low interest rates even lower. That should juice the economy. But it had an effect on the stock market too. If investors couldn't get a good rate of return on bonds, stocks looked that much more attractive. And the money poured in, driving stocks higher for years. There were some serious hurdles along the way when it seemed the bull might fade, especially at the beginning. May 6, 2010, the flash crash. The Dow Jones Industrial Average suddenly lost more than 1,000 points before recovering most of the losses. But fears over high-speed trading kept investors on edge for months.
Financial freefall. The Dow plummeting 600 points.
Then it seemed like things might fall apart in the summer of 2011. Debt concerns in Europe and political unrest in Greece spurred a serious correction in the markets. And after S&P downgraded the credit rating of the United States debt in August, the bellwether index dipped more than 6% in a day. But the strength of the rally prevailed. Technology stocks propelled the market higher.
FANG! FANG! Facebook, Amazon, Netflix, and Google.
Combined, just those 4 companies have added more than $2 trillion in market cap since the beginning of the bull run. And let's not forget about Apple, too. Riding the success of the iPhone, the company's stock is priced almost 18 times higher than what it was worth in March 2009. Of course, it was the first company to hit $1 trillion in market value earlier this month.
To see this happen after talking about it for so many years is amazing.
People thought the bull might end in 2015, when China's stock market crashed and brought U.S. stocks down with it. Then oil prices crumbled, bringing energy stocks down and spooking the markets.
What do we want? Brexit! Now!
And Brexit put the brakes on any upward momentum in 2016. But since then, stocks have been on a tear. For a while, it seemed like nothing could stop them. Not the Fed raising interest rates, not increasing geopolitical risk from North Korea, not even the uncertainty inherent in a Donald Trump presidency. After a short blip on election night, markets have been cheering Trump's policies of deregulation and massive corporate tax cuts. That is until early 2018, when inflation fears combined with Trump's tariffs put a damper on the party. But with stocks back around record highs, this bull market has been a beast, lasting more than 3,452 days. The S&P 500 has quadrupled in value since the bottom. Just look at the Wilshire 5000. It's created more than $27 trillion in wealth for investors. That's quite a bull. And now, it's a record.